5 minutes for Q&A. So please send us your questions via Slido. So I guess the Slido deck will be shown shortly. So Ruben, would you like to start saying a few words about yourself? You had the longest travel.
Thank you everyone. Yeah, my name is Ruben Perera. I'm the head for the Market Data and Statistics Division for the Mexican Stock Exchange, and definitely very glad to be able to participate in this event. We've formed a collaboration agreement with Deutsche Börse recently, so I'm going to be talking about that in particular and some of the trends that we're seeing in our markets, from the North American and Latin American region. So very glad to meet you all. Thank you. Thank you, Stefan.
Paul.
Thank you, Stefan and Ruben. Yes, my name is Paul Bott. I am with the ICE Data Services side of the business for the Intercontinental Exchange. Been with ICE for about 4.5 years. Prior to that time, I spent a lot of time at Bloomberg in New York, so hence I still have the American accent. Haven't shaken it after 16 years of living in London. And I spent some time at S&P as well as a small little startup. We'll be talking about some of the amazing new data that we see emerging in the space, as well as some of the technology solutions that ICE provides for our clients.
Good afternoon, everyone. I'm Marc from Euronext, and I'm responsible for business development in our Advanced Data Services team, which essentially means looking for new ways to make money from data. I've been at Euronext about 10 years now. Previously spent some time at London Stock Exchange and some vendor businesses as well.
Thanks, Stefan. Marc, Bertu, head Exchange Data Strategy for SIX Exchange, and also driving the integration of the data sources from our BME subsidiaries in Spain into our main market data infrastructure, the MDDX feed.
Oh, yeah, then let's start with our first question. So I'm glad you mentioned that, Ruben. Your recent cooperation between Grupo BMW and Deutsche Börse. My first question is about cooperation, integration, and competition between exchanges and vendors. Mm-hmm. Where do we see us now? We've seen a lot of mergers in the recent years. On the other hand, we've seen a rise of many decentralized markets. So how do exchanges and vendors compete, and how do they cooperate for the benefits of users?
Well, I have to say that in our case, for example, we're starting a strategy to globalize and to make a global footprint for the Mexican exchange. So that's how we decided to search for a partner, that could actually help us in that endeavor, in that way of being able to continue distributing our data, on a global basis. And so that's how we started talking and discussions with Deutsche Börse in order to be able to perform such a thing, so that we first started with a point of presence in New York, so we were able and capable in distributing our data from one of the major data centers in North America. But that we were looking also to expand our capability into Europe, and obviously we needed the help of a partner. So that's how we came with Deutsche Börse. And so now that our information is now available within Europe, using CEF technology, CEF the services for Deutsche Börse. This trend in collaborating, it's been something that we in Mexico we've seen, not just with global and major exchanges such as Deutsche Börse, but that it has happened locally, or I should say regionally. In Latin America, for some of you that may not know, there's also some markets that are now integrated into one. It's called MILA, Latin American Integrated Markets. So it's held with Peru, Colombia, and Chile, and Mexico also joined that part. So it has been like a trend to see that exchanges collaborate, not just for trading purposes, but also in terms of marketing, in terms of distribution. And in our case, in the regional market in Latin America, it's to obviously provide visibility to new markets, to emerging markets, into institutional investors such as the ones that trade in Europe and in the United States. So it's a trend that we're seeing in terms of many collaboration between exchanges.
Paul, how do you see that? You have the double hats of working for an exchange and a data vendor?
Yeah, absolutely, Stefan. So ICE is a little bit more unique than some of my esteemed colleagues up here. So ICE really started as a business in 2000, and we started, the story internally is Jeff Sprecher, our CEO, bought a company called the Continental Power Exchange for $1. It might be 1,000 or it could have been 10,000, no one's really sure. But since that time period, we've kind of acquired various businesses along the way. So I'm fortunate enough to work for an organization that has some transactional revenue. So to date, we have about 11 exchanges and clearinghouses that make up that side of the business for us. The most famous one that I'm sure all of you have heard of is the New York Stock Exchange. So instead of telling people I work for ICE, sometimes it's easier to just say I work for the New York Stock Exchange because everyone knows that. But yeah, we have about 11 different trading houses and exchanges around the world. And in 2015, we acquired a company called Interactive Data, which is a legacy business, really predominantly in the fixed income space. They're the primary individuals here today. And since that time period, we've acquired additional data businesses throughout the course of the last few years, to the point that the whole goal was to take what was predominantly a transactional revenue business model and make it more into a recurring revenue business model. And today, ICE Data Services accounts for about 31% of our total revenue, and that's the side that I kind of sit on. And more recently, through acquisitions and what have you, we've been getting involved in the mortgage space as well. So we've had 2 recent acquisitions within the last few years. One that has passed screening and what have you, and the other one was just announced several weeks ago for $13 billion, a company called Black Knight. So you might think, what is an exchange and a data provider doing buying mortgage companies? And the whole goal there really is we want to connect people to opportunity. That whole mortgage process has a lot of different moving parts associated with it, and our goal is to try to just automate the process a little bit more. So yeah, I'm fortunate enough that I can sit on both sides and see the value of the exchange data business complementing our data efforts.
Mike, what is your view on cooperation versus competition?
Yeah, so exchanges and vendors have always had quite a complex relationship, in that they have been sort of mutually suppliers, clients, partners, and there's always been some element of competition. But you know, as exchanges are pretty much all these days looking to grow their data businesses, they're looking to expand by either developing products internally, primarily things like analytics, or, as we've been talking about, you know, acquiring vendor businesses. And you know, Paul's example is a great one, but you know, the other recent one with the LSE and Refinitiv is another great example of that. And it does, I think, change the scope of how exchanges and vendors interact. But you know, to be honest, it's not a particularly new phenomenon. I mean, SIX has run you know, a data vendor business successfully for, you know, a number of years. I remember, you know, nearly 20 years ago, LSE bought the ProQuote data business. So I think exchanges and vendors have kind of worked out how to get along, both cooperating and competing. But I think, you know, we're going to see a lot more of that. From our perspective, our kind of M&A activity, as people probably realise, has been largely focused on other exchanges and broadening our sort of pan-European infrastructure. Vendors continue to be an incredibly important part of our business, you know, with a significant proportion of our revenues generated through their distribution channels. And you know, that will continue for the foreseeable future. But you know, like other exchanges, we're looking to grow our data business through both development, possibly M&A. We shall see.
Marc?
Yeah, following up to what Marc has just mentioned, so yeah, there is a trend of concentration among market operators in Europe, which is clear. SIX acquired BME in 2020. And regarding the cooperation with the data vendors, it's logically key, because obviously data vendors, they are the extended sales and distribution network of our data packages. So logically, everyone has got in alongside the market data value chain. to have close cooperation. And it's absolutely a key that the coordination in terms of launch of new data products, release management, reliable operational setup, and also professional incident management must be absolutely properly organized between exchanges, who are the data producers, and vendors, who are the redistributor of this data, but logically they are adding value to our data, and we are absolutely mindful and grateful for that. One thing I would like to add in addition is, as a market operator, when I go a bit beyond our center of excellence, and one topic would be on my side, the advanced analytics. I think partnering with third-party vendors specialized make great sense. We have a cooperation with an advanced analytics firm called BMLL, and in terms of benefiting from cost mutualization for data storage, for data processing, and also for the heavy lifting of data normalization, it is typically something that would be much too expensive to try to do that in-house, on-prem, with proprietary solution. So in that case, again, the cost mutualization benefits are huge, and it makes great sense to have partnership with specialized vendors.
Oh, thank you very much. My next question brings me to innovation and new technologies. Yeah, to be a little bit provocative, people always see that there's a lot of innovation going on, changes taking place. Does innovation only take place outside traditional exchanges or traditional asset classes, such as cryptos, NFTs, whatever? Or how would you respond to that? Where is innovation happening at traditional exchanges?
Yeah, I can maybe go first there. So, as I mentioned at the outset, we have 11 major exchanges underneath the ICE umbrella. The one I'm probably closest to is a business that we have out of London called ICE Futures Europe. For those of you that don't know that, is basically the home of Dated Brent, which is the global oil benchmark. We do about 80% of global crude oil activity out of that market. And, you know, one of the things that kind of always intrigues me whenever I go onto a trading floor is understanding how a trader parses all the information that's coming into them. I think the record I saw was 15 screens for one trader, and it's just, how do you innovate and allow somebody to process all that content, right? So there was a Cornell University study that said the average human makes 700 decisions a day just on deciding what they're going to eat. Okay, that's 700 a day just to figure out if you're going to have for lunch or breakfast. And then you extrapolate that out, that's 36,000 decisions in a single day, every day. For one of our traders, we have to figure out a way to give them better technology to take all that data that's inbound and helping them bring that data to the surface so that they can make more actionable trading decisions. And that's pretty much what our team does at ICE. We work on the trading solutions side of the business. I run it for EMEA and APAC. We have an amazing platform called ICE Chat. For those of you that don't know, it's about 100,000 people actively on our markets, communicating price and offers, bid offers all day long, talking about football scores as well, and other things. But on a typical day, we have about 17 million messages going back and forth on ICE Chat. And really, innovation there came through our clients saying, how do I manage all this noise? You know, how do I figure out a way to make this data a little bit more valuable? So we created clever AI tools and machine learning tools that effectively parse those inbound messages coming into clients, rip out the structure of the instrument, figure out what the bid and offer is, stack it by the broker setting the communication, and right on one screen, instead of having 4 or 5 different screens, they could get where the bid and offer is in the market, where the broker is quoting them a bid and offer, and then potentially also be able to look at what our derived value might be for those markets as well. So innovation for us really comes from enabling trader workflow. So it is very much in concert with our clients when we try to go down that route.
Marc,
I think Stefan, you were questioning the ability of traditional exchanges to be innovative, and I must say complacency is not an option, and innovation is really a stringent necessity. More than happy to explain that traditional exchanges are very innovative. So we've launched the SDX, the SIX Digital Exchange, a couple of months ago. It's a DLT platform where you trade digital assets in a regulated environment, and we are plugging the best of breed of this digital infrastructure for digital assets to our traditional market data infrastructure. So basically, we are providing the same level of transparency within a regulated environment for digital assets. I would like to mention one other initiative. We have the so-called 12H offering, and this is a digital, it's a microwave data transmission network that is made available to those low latency traders who are willing to enjoy microwave low latency transmission. And also, as I mentioned at the very beginning, we have integrated all the BME data sources into our best of breed MDDX data feed, meaning that we are substantially reducing the complexity for the data sourcing and data consumption from our exchanges.
I agree. We're very innovative, as exchanges. I think innovation's happening both within exchanges and outside exchanges in all sorts of different areas. So, you've got, for example, as Marc was mentioning, in the area of sort of crypto and blockchain, decentralized finance, the increased growth of things like artificial intelligence and machine learning for interpreting data and creating real insights. Within exchanges, there's been tremendous advances in trading platform technology. Low latency data feeds was another one that Marc mentioned. I think from my perspective, one of the most interesting areas is the emergence of cloud as a distribution mechanism for market data. It's fairly well established for distribution of storage and distribution of non-real-time data. Cloud's been used for a number of years for that, and more recently we've been seeing a lot more initiatives around real-time data in the cloud. Some really good vendor initiatives. There was an excellent presentation earlier on this morning from Refinitiv about what they're doing in that area. And over the last couple of years, we've seen exchanges starting getting into that area as well, led most notably by CME, who launched a real-time feed over the cloud 2 or 3 years ago. NASDAQ have also launched a product, and we've had other announcements from SIBO and a few others. So to me, that's really interesting for a couple of reasons. Firstly, for the first time, it makes direct connectivity to exchanges possible for a much larger group of potential clients. So, smaller clients, if you might be a fintech who looks to be developing to an exchange, and they're not going to set up a co-location facility at an exchange, or they're not even going to buy the infrastructure required to take a legacy direct feed, but they could quite easily connect to it via the cloud, even if it's only for a month or 2 months or whatever. There are other potential use cases across small brokers, small banks, possibly asset managers, those kind of guys. So that the first thing of interest, obviously, you're expanding the target for direct exchange feeds. The second is probably even more interesting, and I think this is where we may see even more innovation going forward from an exchange point of view, because it facilitates the more flexible provision of data. So when you're putting it through the cloud, potentially you can start looking at different commercial models for how that data is consumed, maybe not just around subscription, but based on amount of usage, for example. You could potentially offer more granular data sets. So I think it will be an enabler for more innovation around the commercial models and processes that exchanges use. So I think that's a very big, and then finally the next step, the next logical step for that is putting entire trading infrastructures into the cloud, and seen with the CME Google announcement that's something very much in mind for some exchanges, and I know NASDAQ have also mentioned things around it. The final thing I'm going to say is Euronext, we are just completing a proof of concept on real-time data over the cloud to put our market data feed which have been very successful, very encouraging results. So you can expect to see something from us in the future. And if anybody's interested in finding more about that, then please come and see me on the Euronext stand this afternoon, because we're looking for people to take part in a proof of concept on that.
All right. Like you mentioned it already, in recent years, we've seen, what I would call a war for speed, like in this high-frequency trading domain, where people used to arm and to get closer and closer to the exchanges, co-location, and things like that. Where do we stand now? Like you just already mentioned that there are other possibilities to get real-time data, but in terms of trading, like is there some rethinking going on to move away from this possible continuous trading idea, where like the first one who arrives gets executed, towards more, I don't know, something what people call frequently batched auctions? Or is there any thinking going on to rethink like the trading models? Or how do you think will trading look like 10 or 5 or 10 years from now? Who wants to start?
Well, I could say that in our region, in Mexico and throughout Latam, HFTs is coming, very actively.
Mm-hmm.
We are starting to see more and more demand for these sort of participants, and that they would initially ask for huge and large sets of data, very specific, very granular kind of data, with a high precision timestamp, so they could analyze all this information initially. And then afterwards, they would say, okay, we're willing to jump into those such markets because we have analyzed the information, we have analyzed the liquidity, the possibility to actually perform and do business in our markets. So that in that sense, a huge amount of information, highly precise, very granular kind of information is the one that we are seeing right now being requested by these, larger banks throughout the world, from many regions, looking into Latin America to start trading and to start, evaluating our markets as a portfolio alternative. So definitely for us, HFT, algo traders, quants, it's definitely something that it's starting to happen, and it's, they are starting to gather information from our region.
Marc, do you have a?
Yes, certainly. So I think we on our side, we value the diversity of the trading participants community. So yeah, there are HFT, there are algo traders, there are traditional brokers, there are retail broker providers, and they all have a different business model and different needs. So what is important is to have a wide variety of connectivity options, also of order processing functionalities, and also on the market data side to have a different market data solution that are well suited to the individual needs. So there is no one-size-fits-all market model.
Mm-hmm.
You try to find the diversity, and again, this diversity in the trading participants community is, in our view, fundamental to secure a proper liquidity pooling and an efficient price formation. So having only a mono industry with only one type of participant would not be a healthy market setup. So again, diversity is key, and we value this diversity, and we do our best to have, in fact, a wide offering that can suit all needs of the participants.
Thank you very much. Our next topic is about new data. Like data is fueling the new technologies, and new technologies bring new data with it. So which new data sets are we about to see in the next future? Paul, would you?
Sure, yeah. I mean, I think, there's a lot to be said about what is alternative data and what is core data nowadays. I think, you know, our clients are being exposed to so much information on a constantly daily basis. So for us, you know, I'm kind of seeing, I'll pick two that I think are kind of near and dear to my heart. The first is around the whole global trade and shipping workflow, if you would, right? I mean, I think the numbers suggest that close to 11 billion tons of cargo are seaborne, and it's about 80% of global supply and global trade is done via cargo ships, effectively, right? And when we had that crisis in the Suez Canal with that one vessel that was kind of stuck sideways, or the continuing lockdown that we're seeing in Shanghai, and the number of vessels that are just kind of hanging out at port. I mean, all that, as we've seen with the pandemic, have led to real shifts and impacts to global supply and disruption, right? I mean, I helped my dad buy a new car in the US, and it was cheaper to buy a new car than it was a used car because you can buy a new car. The chips aren't available, and it's just kind of thrown a lot of markets for a little bit of a spin. So at ICE, we acquired a company called S-Stock, ESSDOC. They're really involved in the whole global trade, commodity finance business. They take a lot of the contracts, the bills of lading, where the vessels are going. All that is on paper right now. And, you know, our ethos at ICE has always been, how do we convert an analog market to digital? How do we take a lot of this paper-based information, make it digital so that our clients can make more informed trading decisions, right? So being able to see what's on a specific vessel, where is it going? Has it been, you know, hijacked by pirates? Is it stuck outside of a port somewhere because they can't get a berth or something like that? What is the timeline between when it needed to get there versus when it did actually get there? All that's very intriguing to us, and we continue to develop analytical tools to capture that. And I think the other quick market that I think is very near and dear to me, and some of my colleagues spoke about it today, whether through ESG or the sustainable finance session that was on just before this by my colleague, Anthony Belcher. So as I mentioned, ICE Futures Europe is the home to Data Brent, and our crude oil and refined products complex is still a large part of our transactional revenue. But our energy business as a whole is about $1.2 billion. I mean, that's a significant amount of revenue that we make on the transactional side for energy. And by some estimates, you know, they're saying that the global market for carbon and environmentals could be 10 times higher than what it is for crude and fossil fuels. So that's very intriguing to us. We continue to develop what we think is one of the most prolific environmental complexes out there right now. We have the carbon contracts for both the UKA and the EU. And just last week, we launched a new contract called a nature-based contract on ICE Futures Europe. And basically, the goal is quite the reverse, whereas some of those other futures contracts we have capture what we call negative externalities, the negative impact of putting carbon out into the atmosphere. This new contract captures what we call the positive externality. What is the value of taking a Brazilian rainforest and not touching it? Not extracting it for, you know, timber or anything else like that, but leaving it as it is and allowing it to produce oxygen to go back out into the environment. So that was a contract launched last week. Normally, some of our contracts take a few weeks to get momentum and trading activity, but that's been very well received by the community, and we got some good volume on it last week. And we're going to continue to expand in those data sets, if you would, right? Environmental, carbon, those are kind of the areas, along with shipping, that we think are two of the really intriguing data points that we're tracking on a daily basis at ICE.
Thank you. Marc or Mike, you want to?
Happy to start. Thanks a lot. Yes, I think from a market operator perspective, the value of our data is directly derived from the intensity and quality of the liquidity pooling and price formation. So this is key. We are about to launch a new segment with logically new data coming out of this segment It will be a global depository receipt segment. And as a starter, we'll have 6 Chinese blue chip company being listed there. And logically, the great value of this GDR segment will be to enable European investors to trade some Chinese blue chips during the European trading window. So logically, we hope that the liquidity pooling and price formation will be of good level, and accordingly that the data package will be attractive for investors. And maybe just also we used to be quite active on the structured products and ETPs on crypto assets. It's quite successful data package, so it's quite recent new type of assets where lots of financial products have been issued and traded on exchange, where we provide logically the transparency.
Thank you.
I don't really have too much more to add on that, to be honest. I think maybe.
Maybe for the next question, like this is more your turn. My next question would be like, how does the industry evolve regarding market data costs, contracting, and then pricing models? So given that we just see low-cost alternatives, flat rate pricing models, and etc., like how is that evolving?
I can take that one. So we've spoken a lot about innovation and largely around technology, but I think this is one area where I think there is definitely scope for more innovation around commercial models for market data and around the whole licensing and data management area. So from a commercial model point of view, the underlying commercial model for exchange data hasn't changed since I joined the business, and that's a long time ago. The basic setup is that clients subscribe to a fairly broad package of data, and you pay your subscription fee for that data, irrespective of how much of it you use, whether you're using it continually in some kind of application or not. That constraint is driven by the constraints of technology, really, in terms of the way that market data is delivered, and also in an attempt to kind of limit the already very complex way of permissioning and reporting on market data, different market data packages. So that's one element that hasn't really changed very much. There's the other areas on the contracting and administration side. There has been some forward improvements on that in terms of, I think online contracting and online reporting is now reasonably well established for many exchanges. But the underlying problem is still there, that clients have to deal with multiple different license agreements, multiple different policies, multiple different commercial models from exchanges, and that is a massive headache, and one which the industry as a whole hasn't really resolved. There are solutions out there from some excellent products from our hosts at TRG and various other people that help with this, but still don't completely get rid of the problem. There are other initiatives around things like digital rights management, which also making it are trying to make some progress on this area. But I still think it's an area that's ripe for massive innovation, both from technology perspective and just from a new way of thinking.
Mm-hmm.
If I may just follow up on what Mike has just rightly mentioned, is I see one relatively low-hanging fruit, and it's related to what you've just mentioned. It is the lack of harmonization in the contractual terms and definitions. And this has nothing to do with technology, basically. The idea that for one market data concept, you've got one standard definition that is applicable across the entire industry. And this is a prerequisite in order to achieve more automation in the administration and compliance process. So I would like to just leverage this audience and opportunity today to just post a simple call for action. In order to make progress in the harmonization of terms and definitions, we need a collaborative industry initiative tackling this specific topic. What does that mean, a collaborative industry initiative? It means that experts from all the main stakeholder groups, meaning the data producers, exchanges like Euronext 6, so the exchange, the data distributor, vendors, and also the powerful consumer group, do work together and come to a consensus. I think this is the only way forward. It's groundwork. It means time commitment, but otherwise there will be no progress. And again, you can hardly achieve smart contracts automation if you don't have the same definition for the same concept. So I put this call for action, and hopefully there will be some followers in the room to maybe kickstart that kind of initiative.
Yeah. Great. So thank you very much for having your views on these very diverse questions. We'll have about 6 minutes left for Q&A. And yeah, we have some very interesting questions coming in via Slido. So maybe the first one would be for you, Ruben. For Mexican Exchange, the Deutsche Börse initiative, how does that impact your cooperation with LED and BME as a partner?
Well, it hasn't impacted that in a sense, because the lead effort has to do with gathering information from Latin American markets, reference data mainly. And so when we established that collaboration with BME, it was mainly focused on gathering information from the markets that I just mentioned, you know, the MILA markets plus Brazil and other countries from within Latin America. But it's mainly focused on reference data, kind of securities files and end-of-day pricing. While the collaboration that we established with Deutsche Börse has to do with the redistribution of our real-time market data, mainly for the Mexican exchange, through the services of Deutsche Börse within Europe. So it's I should say that both partnerships are in that sense complementary. One of them that has to do definitely with real time, but the other one that has to do with other sets of data from a regional perspective.
Okay, thank you. The second question is, it gets more and more difficult to draw a clear line amongst exchanges, vendors, user firms, etc. Is this a trend? The race for alternative revenue and joint products is on? Who wants to
I mean,
take that one?
We spoke a bit about that earlier, but yes, it is definitely a trend. And, you know, we spoke about exchanges acquiring vendors, you know, vendors and even clients operating trading platforms, whether it be, you know, SIs or whatever. So, yeah, there's a definite blurring of the distinction between the three. Is it a problem? Not necessarily. I think it maybe changes the dynamic a bit in terms of the way that exchanges, users, and vendors communicate and deal with each other. Be interested to see how the dynamic shifted between, you know, Bloomberg and LSE after they bought Refinitiv. But so I think it does. But fundamentally, I think, you know, the way that exchanges set out policies and contracts means that they, you know, they can clearly identify the distinction between those three types of user.
Yeah, and I think I would just add on to that. I mean, I think, you know, there is a race to kind of optimize, if you would, the insight that the exchanges have and how they might transact on those markets. And vendors play a key role in that. So even though I'm in ICE data services, there is a very clear distinction. And I have to play by the same rules as some of my other competitors do in terms of getting access to ICE content and ICE information. So I don't believe it's a problem per se. I think the good news is that we've kind of proven that model through the interactive data acquisition. The street has been very receptive to the stock price as a result of that. I think at the end of the day, all exchanges are trying to balance their transactional revenue business model with more of a recurring revenue business model, right? And data businesses afford them that opportunity to do so.
Okay, thank you very much. Any new asset classes in the pipe for trading on exchanges? It's basically related to our questions regarding new data and how trading will evolve.
Yeah, I think carbon and environmental continues to remain something that's very close to us, and I think, you know, it's something that we're actively involved in as a business. Mortgage is another asset class that I think, you know, we never thought of. I was one of those first guys when an iPad came out and an iPod came out. I thought it was going to be a fad and it would go away in a few years, and little did I know that if I bought Apple at the time, I'd be a billionaire by now. I think this is kind of the same thing about what's happening in the residential U.S. mortgage markets. There are so many processes involved. Literally, it takes 6 to 9 months to get a mortgage done in the U.S. And I just bought another home in the UK, and it took about 4 to 5 months for that to happen. So that market is ripe with inefficiencies, right? And I think what we've proven time and time again is how do we take analog markets, make them into digital, capture the underlying metadata that's available in those workflows, if you would, and enable that data to come to the surface so clients can make better decisions. I think that's where the true gem kind of ultimately lies, and I think mortgage is going to be another area of focuses for us, for sure.
Also, we know there are some initiatives trying to achieve securitization in order of highly valuable pieces of fine arts in order to make a kind of brand new asset class.
Okay. Thank you. I think we can take one more. First, compliments to the two gentlemen from the left on his fantastic socks.
Thank you. My wife bought them.
That wasn't a question, basically.
Excellent.
And yeah, question, how do you deal with dirty data? That's the real question now.
Well, you know, from an exchange point of view, I guess we don't really have the concept of dirty. I guess we identify it as it comes through from a trading perspective. So that's a kind of market surveillance type issue. From a data distribution issue, that's not really an issue for us. I guess it's one that vendors come across a lot and are really sort of experts at. So maybe I'll pass that one over to Paul.
Yeah, I mean, I think there's two sides to it, right? So for the 11 exchanges that we have in our London office, we call it the glass box. We have a very big market supervision arm, so they kind of do the trade surveillance aspect of things to make sure that the trades being executed on ICE exchanges really are kind of in line with protocols, if you would, and there's no illegal or nefarious activity taking place, if you would. In terms of ingesting that data as a data vendor and pushing it downstream to clients, yeah, we have all the tools that a lot of my colleagues up here have. Data quality is extremely important, especially when it drives decision-making and trading activity, so we hold that very close and we monitor it religiously. Yeah, it's evidenced by our clients that are consuming our content, you know. Sometimes they are the best eyes for us, and they'll let us know definitely if there's anything that's off the mark, if you would.
Right.
Maybe just one more word on that, why exchanges do produce good data. I think we've got the full insight over the order entry, order processing, and market data dissemination, so it's mechanic. So nothing can go wrong, basically. So that's the reason why the outbound data is of good quality.
Right. Thank you very much. We're at the end of this session. Thank you very much, all of you, for your valuable insights, and hope to have vivid discussions afterwards at the booth or at the cocktail hour, right?
Thank you.
Thank you very much.
Thank you.